Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities continued their positive momentum as the US FOMC meeting minutes and the US Fed Chair Powell's speech at the Jackson Hole Symposium boosted confidence of a September policy rate cut by the US Fed. Bond yields fell further to a one-year low, weighing on the US dollar. Most major equity indices clocked weekly gains, with the S&P 500, Dow Jones Industrial Average and Nasdaq Composite rising around 1.3 to 1.4%. Asian equities trended mixed for the week, with South Asian markets doing well. Markets like Thailand, Philippines and China rose over 3%, while North Asian markets like Taiwan, Korea and China A fell around 1% for the week. Back home, Indian equities gained for the second consecutive week. The Nifty index rose around 1% over the past week, supported by positive global sentiments and improving foreign investor inflows into domestic equities. Broader markets outperformed the Nifty index, with the Nifty mid-cap index up 1.6%, while the Nifty small-cap index was up 3.5% for the week. Among sectors, metals and telecom led the winners with gains of over 3.5%, while realty was the only sector to end in green with a cut of around 2.9% for the past week. The Indian fixed income market had a relatively stable week, with government bond yields at the shorter end remaining unchanged, while the bond yields at the longer end eased marginally on relatively strong demand as the RBI sold INR 330 billion worth of bonds at lower than cut-off prices at the recent weekly debt auction. The 10-year Indian government bond yield fell 1 basis point to close at 6.86%, while the 3-year and 5-year Indian government bond yield remained unchanged. The INR rose 0.1% against the US dollar to close at 83.9 per dollar, supported by lower US bond yields, weaker US dollar and improving foreign investor inflows into domestic equities. The INR gold rose 1.2%. Brent crude oil rose over 2% on Friday to settle at $79 per barrel, paring weekly losses to just 1%, supported by a weaker US dollar and improving demand outlook following the remarks by Fed Chair Powell suggesting that central bank is likely to start cutting rates soon. Coming to macro updates for the week, there wasn't much except the release of RBI policy minutes for the August MPC meeting, in which it left the policy repo rate unchanged at 6.5% and retained the withdrawal of policy accommodation stance. The key highlights of the minutes included the following. The Monetary Policy Committee, or MPC, expects domestic growth to hold up on the strength of investment demand, steady urban consumption and rising rural consumption. The MPC also noted that there were indications of core inflation bottoming out, but also added that adverse climate events remain an upside risk to food inflation, while crude oil prices are volatile due to demand concerns and geopolitical tensions. RBI Governor noted that at such a crucial juncture, steady growth impulses allow monetary policy to unambiguously focus on supporting a sustained descent of inflation to the target. Another MPC member, Professor Jayant Verma, who had voted to reduce the repo rate by 25 basis points since the April policy meeting, noted that RBI's projections show inflation bouncing up and down from quarter to quarter, but the trend line is clearly downward. On a forward-looking basis, the current repo rate at 6.5% translates into a real rate of 2.1%. Another member, Dr. Ashima Goel, who also voted for a 25 basis point rate cut, agreed with Verma. She opined that MPC, whose mandate cover all groups, has to be concerned about the correct real rates to balance interests and seize opportunities. The first priority for India is to create more productive jobs, to utilize the demographic dividend and prevent political instability. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.